Hey, and welcome to another video here at Fiscal Voyage. I'm Felix, and today this video was suggested by Dylan. Thank you, Dylan, to suggesting Duke Energy Corporation. So we're gonna do a 5-minute stock analysis on Duke to determine if it's a buy, hold, or sell. But first, if this is the first time visiting my channel, make sure to subscribe and like, and leave a comment of what company you'd like for me to analyze next. So let's start. All right, so let's start with the 5-minute stock analysis on Duke Energy Corp. The company is an electric power holding company in the United States with assets in Canada. It provides electricity to Ohio, Kentucky, India, North Carolina, and South Carolina. All right, let's look at fundamentals. From 2009 to 2018, this 10-year period, the company revenue grew at 7.56%, which is a good, respectable rate. Net income grew at a little better rate at 10.62%. The company has an excellent credit rating of A minus. In that same time period, operating income grew at 7.80% and earnings growth at 4.69%. And earnings growth has been decelerating. For example, the 5-year earnings growth came in at 0.92%, so it's much lower than the 10-year average. Net income, however, still continued to be very positive at 9.08 over the 5-year period. Continue with the fundamentals. The company for 2018 adjusted earnings came in at $4.72. Net margin at 1087, which is compressing versus the 2017 of 12.98%. However, for 2019 fiscal year, net margin is expected to come in around 13%. Return to equity is very low at 6.23%. Debt to cap is decent at 51%. The current dividend yield at 4.19% is really good. I like that size of yield. However, the company has a pretty high payout ratio of 75% versus their 20 years, which was normally between 40 and 50%. They've been growing dividends for 12 consecutive years with a 5-year dividend growth rate of 3.30%, so it's just above inflation rate. They have a charter rule of 7.49, which is the current yield plus the 5-year growth rate, so that's very low. For a utility company, I would like to see it at 9 or higher. They have a 5-year dividend yield average of 4.21, so the current yield is right under the 4.21 5-year average. So that's not. I don't like to see that. I like to see the current yield much higher than the 5-year yield average. The most recent dividend increase came in at 1.9%, which is much lower than their 5-year average. So the dividend growth is slowing down. Future outlook for the end of this year, analysts expect a $5.01 earnings, and 2020 $5.17, which is higher than the 2018 of $4.72. So that's good. Earnings is growing, just not at a high rate, at 3 to 4%. As you can see here, CFRA is projecting 5% growth, where other analysts are expecting between 3 and 4%. So I like to be a little conservative and go with the 3 to 4%. During the dividend dual return model, projected total return is at 6.6%. I would like to see it much higher here. For utility or basically any kind of company I invest in, I like to see 9% or higher. We get here 6.6%, so I'm not attracted to this here. Currently, the company has a P of 18.10 with a forward P of 18.7. That's pretty good there, but the 5-year average is at 20, so it is lower than the 5-year average. But again, I don't like that projected total return of 6.6%. If we look at the fast graphs, we see the black line is the monthly closing price, the blue line is the normal PE, and the orange is the earnings with a P of 12.73. Based on this, you can see that it's above both the blue and orange, so that represents that it's slightly above fair value price. I personally would like to see this company with a PE of 15 to 16. I think that's more like a fair value price there. So we go to my fair value price screen here, CFRA has a price of 90, Morningstar at 88, FastGraph at 86, Yahoo 96, and my dividend discount model analysis at 66. Averaging out to 5, we get a fair price of $85.41. Currently, the company goes for $90.15, so that means it's overvalued by 5.26%. Therefore, I have a hold recommendation. I actually have this company on my watch list. I would like to own it, but at this price, I find that the dividend yield, I like it at 4.19, but the dividend growth is just above inflation. So I would like to see a yield between 5 to 6% before I consider buying it because of the fact the dividend growth is slowing down. I also don't like the dividend drill return model of 6.6%. I like to see it above 9%, so I have a nice, better return when I invest in a company. I do like the 12 years dividend growth. However, the payout ratio is higher than the last 20 years. And as seen as earnings are only growing between 4 to 5%, or projected to grow at 4 to 5%, the dividend growth will not exceed that. So you could expect, continued 3% growth. And, like I said, most recently it was 1.9. So they might lower their dividend growth to, 2% going forward. So with that, I recommend this company as a whole. If you have a company that you would like to see next, please leave a comment with the company name and the ticker symbol. And thank you for watching. And if you find this video informative, please hit the like button and subscribe to my channel for more videos like this. And I have my portfolio in the description. There's a link for it. You can see all my current holdings. So thank you again and have a great day.